Good morning, a video morning brief of the U.S. stock market. Rich Potts for Critical Point. It is Wednesday, February 26, 8 a.m. Eastern Time. Okay, let's take a look at the markets. I don't have much to show on the hourly charts, similar to, of course, this futures chart. This is a 6-hour chart of the futures. Level 3 bottom, once a month type of bottom. Might have been there instead of there. If so, it's beyond the minimum already and probably bottomed yesterday. But if it's there, then we met the minimum yesterday for a level 3 bottom, but it's early as allowed. It does not have to bottom early next week, but likely to bottom this week. So level 3 downtrend may have ended. It's time to move this market higher in the next week. Problem is, it may have to move sideways. It may have to go a little bit lower here. Use additional level 4s to find that bottom. That may take a few days yet. Okay, and then still pick its head up by next week. Now, as we zoom in on the level 3s, we have the level 4s that are pops and drops from day to day. The level 4 was supposed to be up yesterday, and today it's working. Now, I told you yesterday that the lowest price of the day might occur early when the level 4 bottom should not occur till 1 p.m. or later, and it's even still allowed today. So there may be some selling first thing this morning, then higher for the level 4, okay? And we may even see the level 4 top later today on into tomorrow. Don't know which. So they're kind of colliding together. It's getting a little bit confusing. My gut feeling is it really ought to go down yet again. It ought to move sideways. It's going to take a while to start this level 3 uptrend. Model, however, is saying have met all, at least the minimum requirements to even the ideal requirements to have this bottom. And yesterday there was news of polling suggesting that traders were becoming more bullish after this drop. Okay, I think they're trying to be contrarians, or they're just looking at very short-term oversold technical indicators. And I think they're off the mark here. It isn't going to work out that well for them, all right? And that's just because of a larger downtrend that I'll explain in a moment. For them now, however, I do think that even if it goes lower today, it will be up by late today to tomorrow, level 4s. So I can't be that helpful right this morning on level 4s. Ideally, it's up today, down tomorrow, next day, something like that. But I can see it could be down this morning yet. For last minute level 4 bottom. One way to look at it, if it's pulling back right now in the futures off the 6,000 level, if they were to pull it back into 9:30 a.m. on into 10:30, 11:30, but later rallied above, say the overnight high or something above 6,000, I think that'd be a clue of probably a level 4 upswing into a top late today on into tomorrow, okay? But I don't know how much to trust that level 4 stuff. I'm primarily focusing on, and the same for the model, focusing on the idea it ought to be putting in a level 3 bottom this week. It ought to be higher next week. Now, in terms of next week, I don't think it's going to trade above 6,100 for the futures. And since there's a little bit of premium to the cash still, then that would help make it easier that the cash won't go above 6,100. I can't rule it out higher. In bear markets or even sizable bearish trends, you can have shocking large up moves against it only to just fall back and extend that downtrend. So they get quite sloppy in the stock market at times. All right. So at any rate, even on an intraday basis, it's already overbought. They might want to back it off here a little bit. But it feels like they're trying to find some stability, find a floor price here to move higher. I think that level 3 trend will work for us. I don't know if interest rates even matter right now to the stock market. Interest rates blipped up a little overnight, already back down, and I'm still searching for a level 3 bottom. I still say looking out the next 1-2 weeks, we'll see interest rates pick its head up, but they've now pulled interest rates down enough to provide a little cushion safety where I now question, will we really see dramatically higher inflation this year, or at least in the summer, and therefore are we going to see interest rates up quite a bit by summer? I think they've taken some of that risk out, and I think the reason is they're looking at a different risk, and that is they're concerned the economy is slowing down, and there's even increased recession talk by some. They are concerned of what the Trump people are doing. Don't particularly care for it. I think businesses are holding back, waiting for things to settle out. And I think even some investors are being a bit cautious as well to see how things work out. This is the daily chart of the S&P 500. It traded down below the 40-day moving average, dipped below the 100-day, snapped it back above it, closed above it. That's kind of encouraging. And I still say it's due for that level 3 bottom any day now. And it should bounce into a level 3 top next week. I wonder if they won't bounce it off the 100, maybe even above the 50 and the 40, start bringing it back down. When I look out 1.5, 2 weeks from now, I'm thinking the market's going to be down yet again, okay? And they also brought the market close to the gap on January 15, and I thought to myself yesterday, I said, this thing's oversold enough. They're going to get it near the gap, and then some people are going to say they don't dare continue to keep selling because they're concerned somebody wants to buy that gap. They may even want to buy that gap, that they're just trading very short term to the downside, but they're asking themselves, how much should they push it, all right? And I think that's what happened yesterday, a little bit of extreme short-term day trading type psychology going on there. I say if they will bounce in next week without filling that gap on January 15th, I think they're going to do it later in March, take it down, fill that gap, may yet go well below the 100-day moving average. And if they don't find enough support, they may yet put it down to the 200-day average of about 5,700. So please keep that in mind. Dow Jones Industrials Daily was flirting with moving averages yesterday as well. I think it can bounce into a level 3, but I'm concerned it's coming down into that January 15th gap and below the 100-day moving average, and may yet go down to 41,700 for the 200-day moving average, okay? And then this is the NASDAQ Futures 100, and I think the market can place a level 3, bounce into next week, back to that moving average right there, and I believe that's the 50-day. I think it bounces back, bumps its head, and on down, and may yet go down to the 200-day around 20,300. Now, if we go to the S&P 500 futures with model analysis, okay, daily chart. Now, the model has been flipping on where were the prior level 3s. It's now saying this is the level 3, AI problem, and then we had the tariffs problem. This is a level 3. This is a level 3. If so, yesterday should have been the latest day to bottom. And with the idea that a level 4 bottom could have occurred yesterday, even though it was a little strange, a little sloppy, I think there's a good chance it's moving higher. And notice today it's trading in one of the downside targets, whereas yesterday it kind of blew right past it. It blew past this one. I think if you drag this out, that's what we have to watch out for, is it may only rally 60.50. Again, the highest I think is 6,100. I do think it's going higher into next week. I think the level 3 trader can probe the upside, but I think I'd rather be a day trader and a intra-week trader with an upward bias rather than just say I'm buying the level 3 and I'm just going to set on it. I don't trust this level 3 rally, and when it's over, I think it's coming down, and we haven't found enough evidence that it's even bottomed, and we know there's time yet for it to bottom, but it is oversold, trying to roll to a buy signal as today. I don't give you alerts normally for level 3s, but I think it's worthwhile saying this thing is bottom. Give me an update today and a little later in the week. Probably got a level 3 bottom. They're probably going to come back, do a little bit of bargain hunting. All right, let's zoom out for the larger trends as long as I'm taking this long to speak. And again, I apologize, I always take too long. All right, any rate, still believe the market's going down into late March to early April for a level 2 bottom. I firmly believe it will bounce in April, maybe even into early May for a level 2. I think it'll be right back down again and perhaps lower still by May, June, July. I think it's even possible the level 2 rally is so weak that it's barely noticeable. The market just keeps grinding its way lower into May, June, July for the level 1 trend. But ideally what it'll be is down, up, down, all right? And ideally the level 1 bottom will be lower than the level 2 bottom. Don't know if it'll work out that way. It is possible it could be a little higher of a bottom, or it could be sideways, a double bottom. Any rate, still have downside potential, 5,900 on down to about 58.14. Yesterday it came pretty close to that 5,900. Notice how it came to the estimated valuation, saying what is it worth. Came close to that. It's acknowledging that. I think the market should get carried away and make it below fair valuation, and that's a trader's intra-year to intra-minor long-term business cycle, kitchen business cycle valuation. That's not like Wall Street's valuation, but I think it's better, okay? 5-week average is rolled over, confirming, yeah, that was probably more than just a level 3 monthly top. That's something more important. They opened it right near it and immediately sold it, okay? Now, I think next week we get a blip up, but I'm not convinced it's going higher than this week's high of 6043.07. But as I said, I will allow up towards 6100. Then I think it's just going to be down again. So think of the level 3s offering zigzags, the level 4 offering many zigzags within the level 3 as well as within this level 2 down move. I'm still bearish. Weekly indicator was overbought, rolled to a sell signal last week. This week it's widening spread. It's still early enough the week to take away that spread. But if it will close the week like that, that's a wide enough spread to suggest chance for lingering near-term downside momentum next 1 to 3 weeks. Well, the model's saying it really ought to go down 3 to maybe 5 weeks, okay? So that's what we've got going there. I'll discuss some of the long-term stuff later. I'm concerned because even if we don't know what we're doing with this minor long-term top, that might have been in July, it might have been in December, and it might be now, and it may not be until April, okay? I'm focused on the minor long-term bottom and saying that's still good enough. We are in some type of a bear market that may not meet Wall Street's definition of a bear market. It may be more time-oriented sideways and wear us down instead of just down, down, down. But we're in some kind of a minor long-term bear market, and we're seeing the economic data now starting to support that. Things are slipping as they look around at the economy. They don't like what's going on. Republicans are actually rebelling against Republican politicians, and as I've said for a long time, the Republican politicians, especially the senators and the representatives and the Republican Party, don't pay any attention to their voters. They just tell them what to do. And really, a majority of the Republicans do not favor probably 50% of what the Republicans are doing, maybe more, okay? But they still feel compelled to go with those people than the Democrats, all right? So there's a lot of things that are going to happen here, no question about it, moving forward. And we still have the tariffs, and Trump says he's still following through with Canada and Mexico tariffs. And Mexico, thank God she's going to be, the head of Mexico is going to be tougher and tougher here. They're all ready to start kicking out CIA and FBI and government people here because they're concerned they're actually trying to take over Mexico. And I can't blame them. That's some of the weird stuff we're going through. All right, Dow Jones Index looks ugly as of last week, trying to pick its head up. It may pick its head up all the way to the 5-week average. I kind of doubt it. And when it goes down below this week's low, yesterday's low, I think that's a negative sign of more downside. But if it does that in the next couple of days, it could still snap back on us to put that level 3 top in. I'd rather it goes ahead and snaps up now, gets that level 3 top out of the way. Weekly indicator acting bearish, leaving mid-range. Now, next up is I was hopeful to find my NASDAQ really quick. This is no, wait a minute. I think I know where it is. Right here, I want the futures. This is NASDAQ futures. I've got a couple time stops that might change some of my forecasts, but right at the moment it looks like it's good. It's heading lower into late March, April. NVIDIA, I really am concerned. I've been reading some stuff where some people think the NVIDIA bubble and the AI bubble, it's for real, and they think it's over and done with. Things won't be great in coming years unless they overbeat it in the next year or two, then maybe fully recover. But someone was even saying it reminds them right today of the fracking in the U.S., where a lot of money was spent to frack. They didn't realize how much money they had to spend. They ran into problems, and they claimed this AI stuff, it really doesn't have to add up. And it's not even as better than the .com. That we accomplished more business then. It costs so much money and energy and this and that to do all this AI that they think it's rather overdone with. Well, that's an important feature of economic development for the U.S. this decade. So I really am concerned things are going to get worse before they get better here in coming weeks, months, and this can still be a go nowhere year or even a down year. So let's keep that in mind. The interest rates, however, dropping now, not because of fear of inflation. If anything, I think they think inflation was starting up, but it's going to back off, and I am allowing that in the next few months. I was allowing it all along, and I've said for quite some time the bigger up moves in inflation really should be a couple years away. I just decided with Trump's and tariffs, it can go the other way, and the model said, why, yes, it can happen now. I think this bond market really is concerned of the future of the economy and maybe even disinflation, maybe even deflation as we go into a secondary recession that is allowed sometime now through 2027. Okay, and we may yet learn that it was one of the rarest times for the history of this country that we actually get a primary recession and we get a bear market of minus 60% even this year. But my guess is that stuff is a few years away yet. And all we'll get is a secondary recession, and we may not even get that. But we can have some bearish times here, and we do want to be careful about this. So I'll wrap this up now. Bottom line is that we should assume, yes, the market ought to really bounce here today, tomorrow for level 4, setback. It ought to bounce into next week for a level 3 and then setback. And then, but I have some issues where it could still be down today anyways and then higher. But I also believe this market is going lower into late March, early April. Now, it's possible they could beat it hard enough here in early March that bottom comes in a little higher, but it shouldn't rally much. It's kind of like a lengthier example of what happened yesterday, where they bought it early, but they couldn't rally it until the level 4 model said there's a bottom. Any rate, just try to remember, it can go lower into late March, early April. Past results are not necessarily indicative of future results. Have a great day. Thank you.